Good morning, everyone. June 5th, Friday, June 5th, and wow, we've got to talk about the amazing, unbelievable, blowout, whatever adjective you want to say, jobs number. Not only did the jobs number validate what ADP said on Wednesday, I would actually say the jobs number came in stronger than what ADP report had highlighted, which is phenomenal. Again, every positive adjective you can think of. Just in case you haven't seen it, we added jobs in May, not subtracted. Right, the expectation was for a loss of 7.5 million jobs in May. That was the expectation. We gained 2.5 million jobs. That is a 10 million, I was going to say dollar, person miss. That's a bad miss. So what does it mean? Well, frankly, it means the states that are reopening are rehiring. I mean, it's that simple. The states that have started to reopen, and again, we go back to the very beginning, and I believe it was Georgia that we were calling out seemingly 6 weeks ago. The states that are reopening are rehiring. It is that simple. And again, you could look at the breakdown and you can see it in the numbers. Bars and restaurants, 1.4 million jobs added. Construction, almost 500,000 jobs added. Retail, almost 400,000 jobs added. Reopening is equaling rehiring. This is amazing. And to put good news on top of good news, or let's be frank, great news on top of great news, the unemployment rate dropped. It dropped. It dropped from, I believe it was 14.9, or might have been 14.7, 14.9. It dropped to 13.3. So yes, still double digits, still bad, but not horrible. And again, what I've been talking about for 10 to 12 weeks is we've got to get to the bottom, and eventually there will be a turn. This turn earlier, much earlier than I had expected. Perhaps my biases of being a California, more specifically a Santa Clara County resident, has gotten to me, because again, we've been on lockdown for perhaps the longest. I think we're opening today for something. So yeah, I admit maybe my California bias caught me. Absolutely, I have no problem admitting that. So again, when the country is opening, rehiring is happening, and now you're going to see an explosion, I would guess, in all the stocks that were beaten up: airlines, hotels, cruise lines, frankly, retail, REITs. I mean, there is so much dry powder and short sellers out there today. Yes, never bet against America is a post we have here. I believe that statement and always have. It's just this is earlier than I expected. I'm gonna have to go back and figure out what happened. And maybe it's the whole Santa Clara County, you've been here too long kind of thing. So freely admit, I don't mind admitting I'm wrong. I admit I'm wrong all the time in the comments when some of you leave comments about, hey, idiot, you were wrong. Yeah, I was wrong. But again, let's think about what this means. So what's happening now? Well, the stock market's gonna enjoy these numbers, no doubt. But now you need to start thinking about what's the next domino, right? First off, I would say, again, if you listen to all the hedge fund guys out there that are trying to scare us, they are short the market. So a lot of that money is going to come off, right? It's going to, they're going to want to cover their shorts. There's all this dry powder. We have record numbers in savings and money market accounts. So there's more dry powder. And again, fear of missing out is real. There is a lot of retail investors who will now believe fear in missing out, and they will rush in after missing 40% rise, right? NASDAQ's already at an all-time high, right? They're already positive for the year. The S&P's within 1%. man, talk about a V-shaped recovery. If you've been buying in this market the last 10 or 12 weeks, congratulations. You have had a wonderful return this year. So again, dry powder, short covering, hedge funds. What really is going to be interesting to look back on is just how divergent hedge funds were, right? Quote unquote smart money and Robinhood users, right? I've quoted Robinhood statistics a couple of times on this channel. Just not only the number of accounts, but the shares that they have been going into. Man, Robinhood traders look, again, 10,000 foot level, look to got it right, and hedge funds got it wrong. Good for them, right? It's nice for the little guy to win sometimes. So congratulations. And also got to go back to Warren Buffett. I've done this once. I think it's pretty clear he sold airlines at the bottom. He was the bottom. He got out and his print was the bottom. I mean, he holds, what is it, 6 weeks, 7 weeks? That doesn't look so bad. So again, Warren Buffett got it wrong. It's going to be interesting to see if he ever talks about that. But yeah, it's interesting. The other thing I think is pretty obvious is I see very, very, very little chance we shut down the American economy again. I think even with hotspots and all of that, we'll do masks and social distancing. I do not see the American economy, the populace going that route again. I just don't see it happening. So even if there is a second wave, which people are going to keep talking about and try to scare us, I don't see us shutting down. Let's hope that's true, right? I don't think any of us want that to happen. Then on to real estate. What does this mean for real estate? That's what I focus on. That's what I've been asking myself the last hour. What does this mean for real estate? Unemployment much strong, or no, employment is stronger than I expected. What does it mean? That is a very good question. I think, again, I still feel pretty good about some markets. Let's think San Francisco, Vegas, New York are going to be in trouble because I do think there's a trend where living vertically or very service-based is in trouble. So I think the exodus, we've already seen San Francisco rents down 9%. New York, very clearly, the ones with capacity are moving out. But I think the rest of the country, man, I think real estate's going to be on fire, right? As long as rates stay low. So there will be statistical markets that are in trouble. I still think the jumbo market is a little bit in trouble, but that will be the thing to watch here, folks. Watch lenders. Watch lenders. Remember how lenders, JP Morgan or Chase came out, Wells Fargo came out? Watch lenders. Lenders are going to tell you if they feel good or bad. If lenders come out and start announcing more programs and the jumbo loan markets come back, real estate will be on freaking fire. But if lending stays tight, it will be a governor on the market. Lending is the one to watch from here. The other thing that I expect to happen, which will be a real test, is if you were thinking about selling, you're going to be